Hello, welcome back. We're at Minds and Money, and I'm with Terence Ortslan, the Managing Director of TSO Research. Terence, good to see you.
Good evening, how are you?
Good, yeah, not too bad, day two. Obviously, we're coming to the end of day two here, and actually a mutual friend of ours suggested that we have a chat and get a bit more on your insights, because I think that they are fundamentally quite important. So just to kick things off, I wouldn't mind you introducing yourself to the audience and a bit more about your background and what TSO Research is.
TSO Research has been set up since mid-90s after the BRIEX, with independent research. Before that, I was an analyst as well on the streets of Bay Street and Wall Street and so on. The issue of the analysis became very competitive and very independent in due course. And we explored that with the financial institutions as well as with corporations and organizations, institutions, other than financial institutions in the world, and need independent opinion.
Okay. And I guess, what's your main focus at the moment? Well, obviously within TSO Research, obviously this is a very turbulent market at the moment. There's not a lot of capital going into mining. Commodity prices are dwindling, other than, you'd probably say, precious metals and maybe uranium. What's your main area of focus in a time like this?
You know, in a global aggregate sense, there's no shortage of metals or resources in due course. What the shortage essentially going to happen, or the bottleneck's going to happen, is because of the capacity issues in the industry. As a business cycle analysis shows that, you're going to have the recovery in Europe, States, Asia. That's fine. It's a given. It's going to happen. The issue is that the super cycle, the way we defined it last 40 years, is over, but has a new way of beginning in other regions that markets haven't figured out yet. China becoming 25 to 30 times bigger GDP per capita since the early 1980s. Yes, they're going to still grow at 2-3% and 4%. That's fine. They got to be another Japan, another Europe in terms of consumption. The question is that who will actually take over from China from single percentage points of consumption to being half the world's consumption of the metals. But that's what the super cycle made up. Okay. In the meantime, it was accentuated actually by the tailwinds of global policy levels in many countries, welcoming mining industry and permitting and understanding what market and mining really means to the economies. We've seen boom in South America, we've seen Central America, we've seen Africa, and obviously we've seen Australia and also somewhat in Europe. That tailwind, let's start with that, turned into a headwind. We are now roughly, I'm going to say, few countries in the world that actually is the old style welcoming mining industry.
Yeah.
And accepting their investment, understanding what the mining company needs and what does a mine need to be built. Capital scarcity is built up in the meantime here. So the question is, yeah, we got the EV idea and electrical transformation. That's going to take a life on its own. But is that enough for a super cycle? We're looking for a super cycle, and I think we found one.
Well, I wouldn't mind touching on, because I actually asked the similar question to Mark Stefani earlier. Do you buy into this EV and I guess energy transition narrative in terms of this next big cycle? And his response was actually more around demographical changes is really where they see excitement. And I guess from your perspective, obviously, it sounds like you're in a boat where potentially the EV market and the energy transition isn't enough, and there does need to be something else. So I guess the question is, well, what is that something else?
It is the geoeconomics, not geopolitics. Geopolitics is such a cliche word that doesn't really interest us that much. Geopolitics causes the location and the and in the supply demand in terms of who will control that. Geoeconomics is which other regions going to be doing quite well. Demographics, as well as the fact that they need it. We're looking for the need, not for the want.
Yeah.
Okay? That's what our focus is.
So how does that work? Tell me about the way you're looking at consumption and supply rates moving forward. further out into the future? Because I got the impression that there was a bit of excitement as we were coming out of COVID. Metal prices started performing quite well. Obviously, there were supply chain issues, and we saw metal prices, in general speaking, were doing quite well during COVID. And I think a lot of people shot the gun a bit too early, calling a super cycle. Doesn't seem like we're there now. How does this narrative? You were saying that we needed super, so before the last 40 years we had super cycles. What's the alternative if that isn't the case?
You can take the demographics as Mr. Kutafana was talking about. That's true because you got 8 billion people in the world today. And of the 8 billion people, approximately, 5 billion live in Asia. And if you take China out of this 1.4 billion people, say, you got approximately 3.4 billion people in other Asia. I think if you look at the economics of the other Asia, it's got a GNP per capita of about a fourth to fifth that of China. And they're not very far.
No.
So China is the neighbor, and they're done very well because of the policies and strategies they pursued. But they have matured. They're going to have the growth. That's not an issue. They're going to have the replacement. That's not an issue. They will do well. But it's the other Asia that super cycle, I think, will take place. We have few countries showcasing themselves, such as Indonesia, such as Saudi Arabia, for instance. And in fact, also we have Vietnam. But the 3.4 billion people, they have a younger labor force, and they have no manufacturing to speak of. And today, product life cycle, went to a business school to learn that. Now it's like, to me, it's quite flat on the scooters or on the electric cars and so on. They may not be interested in building Porsches and BMWs, but they're going to be building their own local cars, local scooters. That brings up the whole opportunity for the governments and the capitalist class in many countries to deliver the benefits to the society. That will take care of their GNP per capita. They will take care of them regional economic development. It will take care of them technology cycle. It will bring the manufacturing to the government. But the question is, all of a sudden, okay, they need a demand for this. They can produce the scooters and the cars. I'm simplifying it, but that's the facts.
Yep.
Where the metal is going to come from? These are not known mining countries. Mining exploration outside of China and Russia in the Asia continent is approximately in the single digit, maybe double digit, I'm going to say millions, okay? We're not talking big money here. And we will talk about this with our clients very soon. But the issue is that even the exploration dollars that's there, those governments have no patience waiting another 5 or 8 or 10 years to develop those metals.
No.
Here we are in different conferences. We see a lot of junior mines and a lot of developing companies, but they haven't got the capital, but they have properties.
No.
So I think we're about to enter a phase of confluence of companies with structure set up with respect to properties, expertise in the technology in mining, and assets. But they never thought about the business model of full cycle. We produce the metal and we also consume the metal. But the consumers are actually in these emerging Asia areas. And the capitalist class over there, they have built the refrigerators and the sewing machines and the washing machines and televisions and the mobile phones. They're looking for the next level. The best example is the Vietnamese car company. When I tell to people that they just broke ground in North Carolina for an electric car, people say, who? And this is a true story that Vietnamese car company building cars in the United States. Okay? Yes, they got 2 models, but it doesn't matter. VinFast is the name of the company. But these things will happen all over the emerging Asia countries. And it's the perfect, to me, affiliation of our juniors and developers with these countries. Go there, explore, and in the meantime, affiliate it whereby we produce the metals for them, and they will consume it because we need a end result where the metal's going to go, and they need the strategic advantage of, and supply chain analysis will show that they want to play the same game as China is, and they want a very secure supply chain. They're going to be able to work with the juniors. This is the next super cycle as far as we're concerned.
Two points to that I wouldn't mind asking would be, with China, the rapid expansion of growth that we saw, it could be argued that a lot of that was attributed to, especially US firms, foreign direct investment into China to ease their cost of operating or manufacturing. Would we require the US to have similar investments into these emerging Asian countries, or will they be able to get there themselves without that intervention?
The most prolific answer would be that they will do their own way. I would say Frank Sinatra way. I did it my way. Because literally the product life cycle and the technology is available, and they do have the engineers, they do have the class of the manufacturing that they can do it, and you got the capitalist class that actually would like to do it. I give you an example of the Vietnam VinFast. There's only one example. They got multi examples. Yes, they will be licensing brand names, they will be licensing certain products, but the question really is, will they be working with the Chinese entities? And the short-term solution would have been globalization, import the products from China. But that's not kind of what they want to do. They want to do their own machines, their own scooters and cars or whatever. So the Chinese will have their own geopolitical friends and colleagues, and they will work with. But I do believe the major other countries will do their own basic work and manufacturing this. I think Chinese are out of this because they've got their own metals for their own consumption and for their own friends and affiliations. And I think the other countries, should they be the Vietnams, the Thailands, Philippines, Malaysia, Indonesia, India, and all the way to Iran and Turkey in the meantime, it will be doing their own way. And this is feasible. This is doable. It actually makes a lot of business sense. And the capital got to be deployed for this to happen. To us, it's a 10, 15-year cycle here that we foresee. But the catchphrase is that, where is the metal coming from? And this is where we come in as the mining industry in North America, in Australia, to be able to position ourselves for their demands.
Have we left it too late? Have China already, do you believe that there's already too much dominance in terms of mineral processing and mining of certain metals within China, that it's now quite tough? One of the things that I've started to notice in things like high purity manganese or even in products like graphite is that China are now making it sort of at cost or even below cost and really pricing out the rest of the world, especially in rare earths, for example, at the moment, NdPr. But it seems to me as though China have weaponized almost the price of commodities to price the rest of the world out of getting into this market and really being meaningful. So really, does the West really have their head around the importance of mining yet? Or is this ship sailing, and is there a potential where the rest of Asia will need to depend on China?
Well, China has created the barriers of entry into the business and into the country. That's correct. That's absolutely well planned, well executed. I think Europe and North America will do the similar business practices. Not all that successful, but it's going to be temporary and partial. But the emerging Asia, they may not need that sophistication and that precision for the products to get into the wheels and for people to get the mobility and the standard of living they will desire.
Yeah,
I think it can be done. Yes, today electric scooters, for instance, the battery life cycle is about 2 years or 3 years. Then $500 or $600, you get a new one and just keep going, right? So you don't really need the sophisticated batteries for a scooter for the 8-10 years. Yes, you want to do the Harley Davidson or a BMW, that's another story. But I think I'm not saying that the quality gonna be inferior, but the access to the product is more important at this moment in time than the quality of the product.
Yeah.
So the 10, 50-year cycle gonna eventually turn into quality and product differentiation. But the beginning is to give me the metal, okay, to produce this.
And so And I guess just to close things off, obviously, if we are in a dynamic where emerging Asia is really the main growth story in the world's economy, that it seems like they probably do have the most amount of room to grow, given their base point, maybe outside of Africa. How does that work in terms of your forecasting over the next 10 years? Obviously, you were shying away from using a super cycle as we traditionally know it, but are you seeing the current market as a floor, and we should be seeing a bit more growth from these areas and hopefully a bit of a better industry moving forward?
No, I think we will see significant growth. So first of all, electrification, because you need power, electrification, no matter what, before you do the cars and the scooters. I mean, we already know the gigawatts and megawatts needed in many of those countries. They need the power, all right? So that will create itself a whole cycle of the supply. But the thing is, I think the shortages are overstated in our view, okay? Bottlenecks are not, but long-term, consistent, chronic shortages are overstated because we have actually today in the copper sector, if we shut down the exploration, we have enough projects to build and to satisfy the demand, double-digit demand for the next 10, 20 years, okay? We need the capital for that. The exploration has to be there because of the maintenance needed. I agree with that.
Yeah.
But we don't need to find extra capacity. We've got enough capacity sitting in the ground looking for the capital to be developed before we go to the next phase.
Yeah.
And same is true for the zinc, and same is true with iron ore. And the only one that actually we have not done well, surprisingly, is gold. Okay, and on this capacity, I'm going to say that the amount of I was just talking to somebody else in a relation. You get 150, 160 million ounces of gold in the ground discovered, not being mined today. Guess how much it costs to get 160 million ounces to be discovered and evaluated? Got billions, but we're not mining it because we cannot get permits and things like that.
Yeah.
So gold itself is going to the central banks anyway. That's the biggest demand in terms of for the future I see. Jewelry and everything else is secondary to me.
Yep.
And that central bank demand because of the BRIC countries and everything else will continue. So
Sure.
gold is a different category. But the base metals, there is enough projects to be built with the capital, period.
Good. When will we start seeing some more capital?
Well, this brings up another issue, which is a very serious issue. The business model, the way we have it now in the Western world, it does not work. Okay? Why doesn't it work? Because people have to get their own share of the rent from the asset. Governments do, special groups do, shareholders do, corporations have to get. Maybe we should use the China model, which is the rent is divided differently, and or we have to do the model that's to change. The difference between mining and the geopolitics, if you want to use that word, is that the political life goes 4-year cycles, 5-year cycles, elections. And mine today, by the time you discover you're going to be mining, will be like 3 political cycles. As a result, mining industry cannot today, with the headwinds that we have around the world, cannot continue with the existing mining laws in the world.
Yep.
We have to have special agreements, we have to have special protection, and or we have to be privatized. And that's the way it's going to continue because shareholder demands and other stakeholder demands does not match to the final EBITDA or what the cash flow can be generated. So the model has to change. There's great questions you're asking, but we're not revolutionizing here, but we are repositioning who the owners are, who the beneficial owners are. Eventually are the people, the consumers that are going to buy the scooter, going to buy the copper tubing. They're the ones going to suffer if you not do correct this thing. Okay, there's an issue that we have to resolve, and the resolving got to be through a new business model. And we keep shipping around the business model here and there, but we have to really sit down and say, but this is not a hypothetical case, by the way. This will happen. If we don't do it ourselves, it's going to happen by process of default.
Yeah. Terence, thank you for your time.
Thank you.